I mean, this is something we're seeing with all the major central banks. They're trying to take an incremental step-by-step approach. And keep in mind, Europe is probably, the ECB is probably in about the worst position of any major central bank right now because of the war in Ukraine and the impact of the energy sector and the price shock that it's experiencing. So at the one hand, they have high inflation and rising inflation. On the other hand, they have slowing growth. And that has to be managed, especially across 19 different economies. So I'm not surprised. This is forward guidance. And I think the central banks are happier to have markets anticipate their moves rather than to shock them at this stage of the game.
How are you thinking about corporate credit markets? Against the backdrop of growth slowing, rising interest rates, there certainly is a risk that asset quality deteriorates. What are you thinking about credit markets?
Yeah, I think in Europe in particular, there's going to be a lot more dispersion, a lot more volatility in the corporate bond market. So you've had the ECB stepping in, buying corporate bonds and holding a big proportion of what's out there in the market. About 340 billion in euros in corporate bonds. And without that backstop, you're likely to see, higher spreads, wider spreads within the credit markets, a lower quality name suffering more relative to higher quality names. So I think we'll see volatility return there. And that's a big question mark as to how the ECB manages this strategy. Another reason to go slowly so as not to cause big dislocations in the market.
One of our other guests, who's a friend of this program, Frederic Drucuzet from Pictet, raised the point that there's a unique feature of today's statement in that they included their forecasts in the statement. Usually these don't come through until the press conference when Madame Lagarde actually delivers this speech. Do you think that we can read into that in terms of how the European Central Bank is thinking about its rate decisions moving forward? They clearly, it was a choice, so it would suggest that they want those forecasts to be front and center for investors.
Yeah, absolutely. I was a little surprised to see them come out quite so quickly, but also relieved to see them because we have a window at least into the thought process and what the ECB is dealing with. So they've lowered their growth forecast, raised their inflation forecast, and that, of course, is laying the groundwork for these rate hikes and this tightening in policy. So perhaps the reason they were released is to set the stage so that the marketplace knows what the ECB is struggling with and why they're setting policy as hawkish as it appears to be. A rate hike coming in July, another one expected in September.